Welcome to Basics of Forex Part 9. We are going to go over how to do multiple time frame analysis today. So we're going to start off with the monthly time frame. Whether you're position trading, swing trading, day trading, scalping, I'm going to break down all those time frame for you guys, exactly how to do the multiple time frame analysis, how to narrow into specific zones. So we're going to go through whether you're position trading, swing trading, day trading, or scalping. We're going to go through all those time frames. I'll show you guys exactly how to do it. Always, I start off with the monthly time frame. I want to take a look at the bigger picture. I want to take a look at where's the price at the moment. And I'm going to start off with the most recent support resistance. What level does price need to break at the moment in order for it to continue up to the next level, up to the next resistance, or down to the next support? So we're going to start off here. This is gold here, by the way. So we're going to start off here creating zones first. So what I see right off the bat is somewhere around this area, I see prices currently holding support, right? So somewhere right into this area, this is a support level right there. I also see support being held right here, right? Support being held right here as well. So you could have a zone as big as this if you would like, but you could narrow into that zone later on as you're dropping down to lower time frames to narrow into that price action a bit more. So here I can already tell that this is more like a fake out because price failed to continue down from here and then continue right back up. So what I'm going to do is narrow it in even more, and I'm going to keep my zone pretty much right about here. I'm going to encompass all the wicks from here, from that 2011 to 2012 resistance consolidation, that economic recovery that was happening from that 2008 financial crisis. And so after that, we had a nice push up here on gold. We had some economic recovery happening, and then we had a push right back down around 2013 is when we really started this entire push down here. So since then, price has held this resistance, and then finally we broke above this resistance here in 2020 with the whole coronavirus situation. So we broke above that, and then we have been holding on to the support for quite some time. So what I'm doing is I'm already narrowing it into my price action, because in order for price to continue all the way down here again into these support areas or even lower, price needs to break this support first. So what level does price needs to break first in order for it to continue down should be your very first question that you should be answering. Now, the next thing is your resistance. Same thing. What level does price need to break first in order for it to continue all the way up to 1900 or even higher? It's this resistance right here, right? So this is the level that price is kind of respecting as resistance. You're going to use whatever's happening here to the left as your confirmation. So that was a high that price made back in 2011, September 2011 and August 2011. So we have that resistance being formed here, and that's the same exact resistance that price is respecting at the moment. So from July 2021 until now, January 2022, price has been respecting that resistance. We haven't really broken above it, and we don't have candles close above it. So I'm going to use this level as resistance. In order for me to continue bullish and kind of fill this wick or even higher, I need to break this level. In order for me to continue down, I need to break this level first. So now I've narrowed into my monthly time frame. If you're going to be position trading, you want to take note of some of these time frames. It's going to be the monthly, weekly, and a lot of people, they stop right at the daily time frame. You could go as low as the 4-hour time frame if you would like, but that's position trading. That's if you want to hold on to a trade for a couple of weeks or even a couple of months. Some people may even hold on to a couple of years, but it really depends on your account size and also your risk management. So monthly time frame is always first, regardless of whether you're position trading, swing trading, scalping, day trading, doesn't matter. Always start off with the monthly time frame so you have a sense of the bigger picture and where's price headed. Now coming onto the weekly time frame, you want to take a look at, are these levels lining up with your weekly time frame levels, right? So on your weekly time frame, we have this area being respected as support. You had a bottom wick rejection and price push right back up. We broke through it one time, but as we were trying to pull back up, we failed to continue right back down, right? Instead, this is more like a fake out. You had a nice push down, and then price came right back into this upper zone that we have. And then same thing here, respected as support, major bottom wick rejection, but where did the candle close again? Right into the zone, right? Same thing here, whatever happened back here where the candles try to break through. We had a little bit of a retest here, but we failed to continue right back down, right? So that tells me that this is a very important level that price tries to break through a couple of times, but it fails to continue down. So that is being held as our support even on the weekly time frame. Now, if you look at the resistance, same exact thing, right? Where you have that resistance right here. So this week we're holding on to this resistance. We tried to break out of it in November, we kind of came right back down to retest, but this candle brought us right back into the zone. So we did not continue back up bullish. This is another fake out. Right before that, if you look immediately to the left, you have more resistance, more wick rejections, and this is more like a support. And when price did break below it, you had a proper retest to continue back down. So this is checking off even on the weekly time frame and on the monthly time frame. Now let's drop down to the daily time frame. So right now, all we're looking at is support resistance, right? So even here on the daily time frame, support, right? Price taps into these areas and pushes right back up. You had support right here for all of this consolidation and then push right back up. Support here again and then push right back up. You had price kind of hanging around in this area, tap into it a couple of times, but failing to break the previous lows, right? Previous lows. And then right here again, support and nice push back up, support and nice push back up. So this checks off on the daily time frame as well. In order for us to continue down here, if that's a question that some of you guys may have, why not adjust this zone down here? Because in order for me to continue down here or the price to continue down even here, we need to break this level first. So if price breaks this level first, then we're headed down here. If price breaks below this support, and then it can continue all the way down here. So this level checks off from our monthly, weekly, and daily. This level needs to be broken first before we're headed down here, and then before we're headed down here. Now do the same exact thing for the resistance. What level needs to be broken right now before we adjust our zones up top here, or even higher up there, or even higher up there? This resistance right here. So let's take a look at, I'm going to mark this off for you guys. So we've got a resistance right here, right? Price failed to continue bullish from here. Once it did break out of it, it consolidated and then it came right back down. So it failed to continue back up bullish. We've tapped into this area and we've had a nice sell-off from here as well. We've tapped into this area here again. We had a nice sell-off from there. We tapped into this area again, right? Tapped into this area again. And then this is where you had the candles breaking above, come back for a retest, hold a support, and then continue back up. This is that healthy retracement that we're looking for before we start targeting any of these areas. If we get these candles to close above, do a retest, and then continue back up, that makes sense to target some of these areas. When price fails to do that, then we know that we're coming right back in, as in this example. So this is the level that needs to be broken first before we can target this, and then before we can target this, and before we can target these areas, right? So as you can see, we're getting confirmations of the zone being respected as either support or resistance in the past. So if you're looking for a position trade opportunity, you're going to be checking out the monthly, weekly, and this is the daily time frame. You can drop down to the 4-hour time frame. A lot of people, if they're position trading, they usually stop at the daily time frame. So now if you're going to look for swing trade opportunities, I'm going to zoom in here a little bit. So what we're going to take a look at is exactly where our consolidation areas, what levels do we need to see being broken first before we're headed back down. So here, now I'm going to use some lines here instead of more zones, just so you guys are not confused. But we saw a nice top wick rejection and then push right back down, right? So here we have this support. This is the last daily support. We are still maintaining a bullish structure here. So nice support here. And if price is going to continue back down, that's where you start targeting the next levels. So this is the next support, and that's your consolidation resistance. Now let's take a look at both of these levels here. You have a support. That support was also respected as resistance in the past. That same exact level was rejected by wicks. That same exact level was respected as resistance. And then you had quite a few fake outs here. Same thing here. Another fake out, but for the most part, another support, right? So this is a very important level. Why? Because you see price tapping into it several times. There's a lot of price action around this area. Either this area has been respected as support or resistance, and we do have fake outs around that area, right? So in order for you to look for swing sell opportunities, you need to wait for the support to be broken, and then you can start to target the next support areas. Now let's take a look at the next support area. What's the next support after this? Immediately to the left, this is the next support. That support was also respected as all of this consolidation, resistance. Price failed to break above this level in all of this consolidation before this candle came around, and then we had a nice retest to continue back up. That same exact level that was respected as resistance was support in the past. And then if you look to the left, then you have fake outs here again. You have fake outs right here again. And this is also support, resistance, and then look to the left, resistance. So if you're going to look for any sell opportunities, you need to wait for this support here to be broken, continuation down, and you can have about 120 pips. That entire range is about 120 pips. And then if you let runners go, then you can come into this consolidation. One thing is, do not look for additional trade opportunities within a consolidation. That's a lot of uncertainty. Do not trade in a consolidation. But if you were to let this trade run from about 120 pips, coming all the way down, you could have a runner for about 270 pips total. So initial entry coming all the way down for about 270 pips. It's very doable, but again, this is going to be your first target, and then you start targeting the next support areas, which is into this zone. So that's for support. Now let's say for resistance, right? Price holds on to the support and pushes back up. What's the most current resistance that price has to break? It would be this one right here. If you look immediately to the left, this is a resistance. And then after that, you have another resistance right here. And then if you look to the left, that's another resistance. So I'm going to mark off that level here as well. You've got that resistance right there. If this candle flips back up bullish or price kind of fluctuates into here, consolidates, and then we break above, let's say this 1814 or 1815 level right here, then we can start to target the next resistance level, which would be about 138 pips. So let's say around 130 to 140 pips, depending on your entry. This is the next resistance area. This is a very important zone coming from the monthly time frame and the weekly time frame, and it's being respected on the daily time frame. So before you look for additional entries, as soon as you approach this level, you want to make sure you're waiting for proper breaks of this zone. So you need to see candles breaking out of this. You need to see bottom wick rejections, break and retest, whatever your strategy may be, you need to wait for your confirmations. You take that trade opportunity for about 130 to 140 pips, and then you can let runners go, and then you're targeting the next resistance areas. What's the next resistance? Right up top here. So you could turn that 130 to 140 pips into almost 500 pips on the daily time frame. Now let's drop down to the 4-hour time frame and narrow in into our price action even more. So all of these levels here are from the daily time frame. Let's drop down to the 4-hour. Do these levels line up on the 4-hour time frame? For the most part, yes, we do have some fake outs here. We do have a fake out here. We do have bottom wick rejections and then a push back up. As you look to the left, you want to confirm whether or not there's a ton of price action happening around this level, right? So you do have resistance right there as well, resistance. So this area checks off. This is an important level. If this breaks, then we can head right back down to 1788. And if 1788 is broken, then where are we headed next? Right into this zone. If you're looking for buy opportunities, this is our level for those buy opportunities. You want to take a look at whether or not this level also checks off. Yes, it does. And why is that? You have a ton of wick rejections, but when price broke above, it gave you a nice retest right into this area with this bearish bottom wick and then a push back up. You had a little bit of a fake out and then push right back down into this consolidation area. Top wick rejection, nice sell off. Top wick rejection, and nice sell off. You look to the left a little bit more. You have a support area being formed by all of these candles here. Look to the left even more. Top wick rejection and a sell off. So this level here checks off as well. If price breaks above this, then you have clean buy opportunities into that zone. So this is for swing trade opportunities now. So either you could stop at the 4-hour time frame, or you could go further down onto the hourly time frame. But usually for swing trade opportunities, you should be analyzing the monthly, weekly, daily, and the 4-hour time frame. Now let's say if you drop down to the hourly time frame, you could have your entry based off the hourly, and you're going to do the same exact thing. So what levels here need to be broken? So both of these are still significant levels that we have. You have consolidation right here. So if you're going to look for any trade opportunities, you want to make sure that you're staying clear of this zone right here. So if price breaks above this, gives you a nice retest or whatever your strategy may be. If it gives you a nice retest and continues back up, then that's your entry right there. If price breaks out of this zone right here and continues down, then that could be your entry. Now, if you're looking for, let's say, a day trade opportunity where you really don't care about swing trading, you just want to be in the beginning of the session and out by the end of the session, you're going to do the same exact thing. Now narrow into your price action a bit more. I'm going to remove these levels so you guys don't get even more confusing, so it doesn't look cluttered. Now let's take a look at what are some resistance or support areas that price is currently approaching. So very first thing that I'm going to do is I'm going to work up for my support level. I have my support level here at 1801. Right, that checks off here on the hourly time frame as well. So all of this is consolidation. This is not a zone that I want to trade in. If I look to the left, what's happening here again? you got resistance, you got support for all of this consolidation, you have support right here, and it's cutting right through all of this consolidation. So that tells me that this is a very important level for me personally. So I will not be looking for a trade opportunity if price is somewhere around here. Once price taps into the zone, I will not be looking for a trade opportunity. So the way that I determine how big to make my zone is I try to encompass all of these candles here, right around this area, even support areas, consolidation right here, and then also these wicks. So that's how I determine how big my zone is going to be. Once price taps into this zone, I'm not looking for a trade opportunity. I'm just looking to see how price is going to react here. So some of the things I want to take a look at is whether or not price is going to come back and tap into this area. So it pushes right back down here and then comes right back up to 1814. Or is it going to come back and tap into this area, break through it, and then we can look for some sort of a pullback and continuation down. I want to see how price reacts here. It's going to be one of these two things, or it just consolidates and then eventually it breaks out in a bullish trend or in a bearish trend. I would do the same exact thing for the resistance here as well. Create a zone here. Now what I'm doing is I'm encompassing all of these candles here. So you have a little bit of a fake out there that you can also encompass if you would like. You can make a zone this big or a little bit tighter. I personally like to keep my zones as tight as possible, but try to incorporate all the wicks and candles that I can. So right into the zone, as price is breaking above, I want to make sure that I'm going to wait for candles to break out of this zone, not just at the level or close into the level, but close out of the zone, wait for some sort of a pullback and then continuation up. Right? So I do have resistance right here, right into this consolidation, support, and then same thing right here as well. So these are two zones I want to steer clear of. Now, if you're looking for, let's say, a day trade opportunity, you're going to do the same exact thing, monthly, weekly, daily, 4 hour, and 1 hour, and you can drop down to the 30 minutes if you would like. If you're a scalper, you should definitely be using higher time frames and coming all the way down to usually 30 minutes or even the 15 minutes. There are some people who like to use lower time frames, like the 1 minute time frame, but I personally don't do that, so I'm not going to cover that in this video, but you can do the same exact thing that we're doing here. So as you can see, all we're using is support resistance. That's pretty much it. I have covered trends, how to identify the structures in a previous video, so you can refer to that. We won't cover too much of that here, but that's also another thing that you want to be taking a look at, support resistance and structure, right? Is it bullish or is it bearish at the moment? So clearly this is a nice sell-off that's happening here. Now we're on the 30-minute time frame. We see a nice sell-off. We see that there was a resistance here and a support here. After price broke the support, it was a nice push down. Even on the 30-minute time frame, this zone here checks off. You got all that resistance that was being formed here. You had that break and retest support before a nice push down, and then another retest, and then another push down, right? So this is a very important zone. It checks off. We have seen a ton of price action here. Look to the left. You see the same exact thing, a ton of consolidation here. Look to the left even more, and a ton of consolidation. So here, at the moment, we're just a couple of pips away from this zone. So you just want to take a look at how much price is moving around these areas, right? So this is the perfect time to not take a trade, but simply watch the market react to these zones. And then when you start getting your confirmations, that's when you start looking for your entries. Same thing, if price can break above this resistance, then you have clean buy opportunities to the upside. If price breaks below here or creates some sort of support and then pushes back up, then you have your entry opportunities there. You're going to do the same exact thing onto the 15-minute time frame. I only trade on the 15-minute time frame if there's news coming out. Other than that, I'm always waiting for my confirmations on the 30-minute time frame, taking my scalps, and then trying to turn them into swing trades. So what that pretty much encompasses is taking trades on the 30-minute time frame, placing my stop loss on the 30-minute time frame, but my TPs are on the hourly and 4 hour. So in order for this to work, I need to make sure that my higher time frames are in the same direction as the entry that I'm trying to take. So if the 4 hour is bearish, but I'm looking for a buy opportunity, it doesn't really make sense, right? So I need to make sure that my daily, my 4 hour, my 1 hour are all bullish if I'm going to look for a buy opportunity on the 30-minute time frame. So same thing on the 15-minute, you've got your resistance. That was a support here. Does this zone mark check off on the 15-minute time frame? Yes. So price broke above, created a support, and then pushed right back up. That was all fake outs right here into this zone. You look to the left a bit more, and you do see candles closing into the zone, being respected as resistance or as support, or you see consolidation. So that's how I do my multiple time frame analysis, higher time frames down to lower time frames. Two simple things that I'm watching out for is simply what is the structure on all time frames. So I want to make sure that if I'm looking for any sort of trade opportunity, that my structure matches on monthly, weekly, daily, 4 hour, 1 hour, and 30-minute. The second question is, what is the most recent support or resistance area that needs to be broken in order for me to look for a buy or sell opportunity? So these are two key things that I'm always answering as I'm going across timeframes, whether it's the monthly, whether it's the weekly, whether it's the daily, doesn't matter. I also use the 12-month and the quarterly for even higher time frame analysis. But if you have the free version of TradingView, you're probably only going to have access to the 1 month. So that's perfectly fine as well. So if you're starting off and you're trying to do multiple time frame analysis, always start off with the monthly, weekly, and daily. If you ignore those and you start trading based off of only the 1 hour and 30-minute time frame, and let's say you're approaching some of these key areas here, and you don't realize that these are actually daily or weekly or monthly resistance or support areas, and then price reacts heavily off of it, you're going to be very confused about what just happened. So make sure you're paying attention to the bigger picture. You're paying attention to if price is approaching those monthly, weekly, and daily levels, and start to think about how can price react to that area depending on what's already happened there before.